Bitcoin is now sitting around $105,000. There were no rate cuts, and Trump now wants to appoint himself as the head of the Federal Reserve. In today's video, we'll be going over the recent Bitcoin price action, talking about what the highest likely scenarios are, and we'll also be going over the most recent FOMC meeting. If you enjoy the content, make sure to smash that like button and subscribe. Let's jump right into the video. First things first, taking a look at the Bitcoin chart, this is the 1 hour time frame. We can see that it looks like we're starting to form a little bit of a double bottom. Now, I was struggling here to actually enter a proper trade because there is a lot of liquidity below us now, right around $102,700. Let me show you exactly what I'm talking about. So if we zoom out here and we take a support level, we can see that there is a lot of liquidity right around this level. Let's just make a horizontal line to show you exactly what I mean. Right around here, Bitcoin has tapped into this level several times, and it also goes all the way back into this high liquidity region. So it only made sense that Bitcoin was to get another bounce around this area, and I actually pointed out this potential trade setup in my free Telegram community. By the way, that is the first link in my description down below if you'd like to join, completely free. But anyways, as you can see on the 1 hour time frame, we did form a pretty nice double bottom, but I didn't actually enter this trade because of the following. If we take a look at the liquidation map, first of all, there's a lot of liquidity to the upside. We already know this, and as I'll touch on in today's video, there are way more shorts in the market than longs. However, given where the price actually was, which was right around $103,600, there was a ton of liquidity going all the way down to around 102.7K, as we can see on this chart. At the current moment, if Bitcoin were to drop from $105,000 to a mere 102.7K, we would get over $3 billion worth of cumulative long liquidation leverage. Gone, just like that. And so when I was considering entering this double bottom, I ended up not entering simply because there was a lot of liquidity right around these areas. I mean, guys, this is the 1 hour chart. This is not a far drop for Bitcoin. Do you know how many times we've had a nasty wick before reversing? So ultimately, I didn't enter this trade, and I was worried that we would come back down and liquidate some of these longs before going ahead and moving higher. Now, because we didn't liquidate some of these longs, and right now we're getting a nice bounce, this remains a very difficult environment to trade in. Had we liquidated some of these longs, I would have been more comfortable entering a Bitcoin long position right around these levels as soon as we wiped out all of this high liquidity zone. So back to the Bitcoin chart once again. Right now, if I zoom out and we take a look at the bigger picture, what you want to consider here is that this is indeed a green candle, and we are holding this area as support on the daily time frame, which was a very, very crucial level, as we can see, before we went ahead and put in an all-time high. Now, the next couple levels that you want to pay attention to if Bitcoin is to see some more upside from here is indeed, first of all, the monthly level. Very, very important, and right now we are back above this level. We've wicked to this level several times, and if we can continue to hold it as support, that is this red line over here, the monthly open, Bitcoin can easily move much higher. Now, we also flirted with the weekly open. That is still going to be a big test, but the most important level is 106.2K. As you can see on the chart here, I have it jotted down as $106,160. The reason, once again, this level is so important is because we weren't able to get those daily closes above this level when we set that previous all-time high, and then when we did set the new all-time high, we were able to close above that on the daily time frame. And so it does remain a very important support or resistance level. So let's see. There is a chance here that we go and we trickle on up and potentially get rejected from either the weekly level or this 106.2K all-important daily level. However, I actually don't think this is the case. I think it may be more likely here that we hold this level as support and make our way a little bit higher. The reason being, it's just a matter of liquidity. Once again, there is a ton of liquidity built up. Everyone is trying to short this market with all of the recent war escalations, and so I think that the market will punish a lot of those late shorters. Now, you can see that most of the liquidity is right around the all-time high, between $110,000 all the way up to around $112,000. So it would take a pretty strong pump to liquidate these guys. However, I would not rule it out, especially if we take into account my summer chop thesis. I won't go over that again, maybe in another video, but you guys get the point. I think we will just chop around during the summer. Basically, back to the Bitcoin chart, we can see that this has really been an indecision week thus far, just continuing to chop around. Now, I still think that there is a danger of around $102,700. We came very, very close to that level. And as I mentioned earlier in the video, that is why I didn't enter that double bottom position, because I was worried we would trickle on a little bit lower and I would get better confirmation after we liquidate those longs, which indeed didn't happen. But what I can say is that that didn't stop my community from actually entering that position. As you can see here, I spoke about it in the free community, and I had a couple of members reach out to me afterwards saying that they positioned themselves and made some very, very nice profits off of this massive bounce that we got on the double bottom. Again, that is the first link in my description down below. And speaking of the links down below, I do have an exceptional opportunity for you. With the third link in my description down below, you have access to weeks. And with my link and my link alone, you get access to 25% off your own fee reductions as it pertains to trading, and you get VIP 2 within the Weeks platform. Now, getting VIP within this platform usually is determined based on your trading volume, how much you deposit, but this time around, I have worked with Weeks directly to get you that VIP 2 and 25% off all of your trading fees. Again, that is the third link in my description down below. Now, let's take a look at Ethereum. We can see that we're still just chopping around. However, despite the fact that Bitcoin got back above its monthly support level, Ethereum is still struggling ever so slightly below it. Now, this can of course change, but for now, I would like to see Ethereum start reclaiming these important levels if we can see some continued upside. As always though, as we've come to realize, Bitcoin determines the rest of the market, especially with this most recent Bitcoin dominance uptrend. Now, next up, what I wanted to talk about is the fact that the Fed will continue quantitative tightening. What this means is that we will not see the Fed expand their balance sheet. We will not see quantitative easing, meaning no money printing. I don't know who was expecting that. Obviously, rate cuts, there was a 98% chance that we wouldn't get any. However, I do know a lot of people that were hoping for quantitative tightening to end. This is not the case. Now, the reason I have this chart here is, you'll remember this if you've been watching the channel for a while, we compare how the Fed's policy is to the ETH Bitcoin chart. And so right here, if we put a bit of a vertical line on the chart to show you exactly what I'm talking about, I put this line here, and you can see that when this pink line goes down, that is when we're in quantitative tightening. And you can see that is when Ethereum bleeds against Bitcoin, which is of course not a great environment for altcoins. Then we had quantitative easing. The money printer turns on, the Fed keeps on expanding its balance sheet, and Ethereum outperforms Bitcoin. Now, what happened once again? As soon as we started entering quantitative tightening, same exact scenario. ETH Bitcoin continues to bleed, and this has been a theme for a very long time now. It's actually been years that ETH Bitcoin has been bleeding. And the reason I'm pointing this out is because this is certainly not an environment which is conducive to a proper altcoin season. As we can see, ETH is still struggling against Bitcoin, and if I zoom in a little bit further, it seems like we're getting rejected at the bull market support band, which means that ETH against Bitcoin could potentially go lower, especially if Bitcoin continues to chop around. We know what happens already. Bitcoin dumps, everything dumps even more. Bitcoin pumps, everything pumps a little bit less because it's relatively uncertain whether that pump will last. So this is a very, very difficult environment, especially for altcoins. I know a lot of you are knees deep in altcoins, but as I've been saying on the channel for months, I still don't think it's the time to be deep into altcoins. Of course, if you're already at a significant loss, then maybe it doesn't make sense to sell all of those altcoins. Maybe you'd like to wait until we have more favorable monetary policy, and then we can get a proper altcoin season. In my opinion, this is likely to be towards the end of the year. But anyways, not financial advice. Just wanted to talk about this because I know a lot of you are knees deep in altcoins. Please make sure you're managing your risk accordingly, and hopefully this is a lesson to you to be holding mostly Bitcoin in your portfolio, especially during a bull market where we're in quantitative tightening. Now you know for the next cycle. So next up, let's also take a look at others, which are all of the cryptocurrencies outside of the top 10. And you can see I also have the Fed's balance sheet on this chart. It's the exact same scenario. When we're struggling, when we're in quantitative tightening, you can see that others continues to bleed. All of the cryptocurrencies outside of the top 10. Now, what you'll notice here, which I want to highlight, is the fact that when this is flat, so when the Fed actually ends quantitative tightening, but it doesn't necessarily start quantitative easing, we're just flat, it can still be an environment where altcoins can perform. All we really want right now is quantitative tightening to end, which it hasn't yet. And as we can see, obviously when the Fed is expanding its balance sheet and we're in quantitative easing, others performs extremely well. And a quick checkup on Bitcoin dominance. I mean, there's not much more to say. We're going to continue going higher, as I've been talking about on the channel for a very, very long time. I'll make sure to keep you covered on this, but I feel as if a lot of you guys are annoyed that I keep on talking about Bitcoin dominance simply because my base case is that we will be moving higher, especially into the summer where we have less favorable seasonality for not just altcoins, but also for the crypto market as a whole. I think that Bitcoin will continue to dominate. Let's take a look at what Trump had to say. So he came out and said, "Am I allowed to appoint myself head of the Fed? I'd do a much better job than Powell." Obviously, he's just joking around here, but honestly, his relationship with Powell has been on the rocks for a while now, and it really does seem like he wants him out. Here again, President Trump says the Federal Reserve probably won't cut today, and Chair Jerome Powell is not a smart guy. I mean, how could you say this about the guy that you elected Fed chair yourself? Let's scroll up here. Federal Reserve leaves interest rates unchanged, remains at 4.25 to 4.5%, as I covered earlier in the video. Nothing has changed, and Fed Jerome Powell actually came out and did say that he thinks that the economy is in a solid position.
Elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment.
And because of the fact that the unemployment rate remains low and the labor market stays relatively resilient, there's no reason for him to go ahead and cut rates, especially with worrying signs of inflation potentially coming back. So you can see that this is a very difficult role to play. And here's a summary of the Fed meeting if you weren't able to watch it. The Fed leaves rates unchanged for the fourth straight meeting. The Fed says uncertainty has diminished, but it is still elevated. Fed lowers 2025 GDP estimate to 1.4%, lifts inflation estimate up to 3%. The medium Fed forecast shows 50 basis points of rate cuts in 2025. Meanwhile, we know that Trump would actually prefer 100 basis points of rate cuts. Typical Trump. Interest rate futures increase likelihoods of rate cuts beginning September. So all in all, nothing has really changed. And let's wrap up this video looking at the liquidity maps once more. As we can see, there's a lot of liquidity starting to get built to the upside here. However, in the market, we know that there is a lot of liquidity right below where we currently are, sitting just below $103,000. I would be very surprised if we don't at some point at least tap into this level to grab that liquidity. However, as you know, my base case is that we will also likely grab a lot of this upside liquidity. Right now, there's almost 2 times more shorts in the market than longs, and so please be careful, especially if you're trying to short this market. As soon as we started coming back down from that all-time high, everyone entered shorts. And this is why I keep on telling you to be cautious if you're shorting this market, expecting us to go into a bear market, because I don't think that this is the case. We're likely to have a choppy summer, and then we will have an explosive move near the end of Q3, Q4 2025, which will likely be the last move to top out this bull market. And that sums up today's quick video. Nothing has really changed. Rate cuts, none, and Trump wants to be the lead at the Federal Reserve. Also, we have a ton of shorts entering the market. However, there is a little pocket of longs, which I do think will be getting liquidated. If you enjoyed the content, make sure to smash that like button and subscribe, and I'll see you in tomorrow's video.